Hey everybody, Mark Yegge here, just with a real quick update about the market. And we're going to have a little bit of a charting session later on. So if you don't want to watch that part, I'm just going to do that at the end. But in the beginning, yesterday I talked a little bit about how we're doing a bottoming process. And I'm going to show a chart in a minute about how interesting it is how stocks have memory. And you'll get to see that about how we're now starting to bottom here a little bit. The thing I'm concerned about is I'm getting a lot of people still calling me and asking me what to buy. And when that happens, that means people aren't afraid enough. And that means a real bottom hasn't really solidified. So the fear is not there yet. I don't think, and that's a big indicator that's a time to buy. So there might be some more downside, but this is a bottoming process like I told you yesterday, and like I'll continue to say, in that we had a 1,000-point swing today, hitting a low and back up another 500 points. So we've had all kinds of gyrations in the market. Listen, this is a time where if you're quarantining at home, you're sheltering in place, whatever you're doing, this is a time for you to spend learning. Hopefully you're not just streaming Netflix. This is an opportunity for, if you're not working, for you to learn something. And it's also a time for you to maybe take inventory of some of the mistakes you may have made in your finances in the last several years. As things were going up, were you preparing for the rainy day? This is capitalism. It's not the most perfect system in the world, but it's the best one we've got. And in capitalism, you've got to save for a rainy day because we have bubbles, because people get greedy and then they get fearful. And those two things is what is part of what makes capitalism. It's part of it. We can't do anything about it. We just have to be careful and know that that's what we should be preparing for those cycles. Some of these big companies that are all looking for bailouts, they've been spending a lot of their money buying back their stocks. So they've been trying to keep their stocks up so they can get nice bonuses. And meantime, now when they need money, they're out. So they're going to be asking us, the taxpayers and the government, for us to bail them out. I'm not sure if we should. There's a time and a place for that. But they weren't being good stewards of their money. They were making money all these years, but then they were putting it away. And is that the case for you? So if you've been making money all these years and you haven't been putting it away, so that now you're panicking about what's going to happen in the market, what's going to happen to your income. I hope that maybe there's a way that you can learn from this. And maybe the first step is to start doing a budget. Instead of being a victim and looking for the government for a handout, change your mindset and say, you know what, I'm ready for this the next time it happens. Or start to get ready for it now so that you can take control. These are the greatest opportunities that are going to be before us in the next probably 10 years. You're going to get tons of opportunities in front of you right now. Are you ready? Are you ready to take action? Are you ready to do something about it? Or are you going to choose to be a victim? I hope you're not going to be a victim. So the next segment of this is I'm just going to show you a quick chart about how the bottoming process is working. So if you're interested, keep watching. Oh, and by the way, I do have a book out that it's actually not out completely. It's backwards. It's called Hacking Money. It's cracking the wealth code so that you can create abundance in your life, really. And so it takes you from a soup to nuts situation, from budgeting all the way through how you can make passive income so that you're not always working, time for money, and your money starts to generate with passive income. So you can check it out on hackingmoney.com, or it's available on Amazon also. All right, so let's take a look at that chart. Okay, let's take a quick look at the index. I'm looking at the New York Stock Exchange Composite Index, and you can see that it's kind of lollygagged and done its thing lower left to upper right on this whole chart. And then all of a sudden you see the biggest downdraft we've ever had, except for maybe in 2008. That's a pretty close second. But this is a pretty big bar here on the right. So looking at that, if you take a note, I'm just going to draw a line here at the bottom of it. Look at where the bottom is. It's right at that spot at 89.37, which is the bottom from January of 2016. So we've given up in 4 years, just a little over 4 years, in 1 month, what we gained over the last 4 years. So we've given up 4 years of gains in 1 month. It's amazing to me that that's what happens in the markets. But they say the market takes the escalator up or the stairs up, and then it takes the window down or the elevator down. So that's what we're seeing. But you'll see stocks have memory. So these stocks come back to these other positions. They might undercut them just a little bit. This has got a lot of volume coming down into this. And if that happens, that's a little scary because it can continue to go lower. And I don't see enough fear in the market yet. I see a lot of panic, but I don't see the full amount of fear for the market yet to show me that this is a real bottom. Nonetheless, I take what the market gives us and we add to it that way, and we deal with it that way. So we're seeing this low all the way back to that period of time. Notice how it's almost to the penny, how it kind of comes in there, touches that low, and now it's bottoming here. And it's probably going to revert to the mean, but it's going to be a bottoming process. There's going to be some up and down, 1,000, 2,000 point gyrations in the day. Real quick, if you still want to geek out with me, I'm going to take a look here at the treasuries. Notice the treasury market is tanking after just a huge parabolic run up over the last few weeks. Now that the government's printing all this money, the money's becoming worth less. Not worthless, but worth less. So the treasuries are actually declining. And I'll show you what that does to the gold market. So looking at the gold market, you're seeing, okay, now everybody's like, all right, the money's been sold, the dollar is becoming worth less, so let's sell our treasuries, let's sell our gold and go into equities. These are things that need to happen in a bottoming process as people take money out of some of these safe havens like gold and the treasury market, which are considered safe, not sure how safe they are, and they start to pour them back into equities because there's outsized opportunity compared to the risk. So I always find that interesting, and again, we're making a bottoming process. I hope that helps you just to kind of keep a cool head during all this stuff, but I always find it interesting, and I hope you do too, and I hope you do well in this crazy corona panic.